Okay, hello and good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Anucauskas. Today is the 19th of March 2019, so welcome everyone. Welcome to this Tuesday's morning session where we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. There's always a few seconds for you to read the rest, and we can continue. Okay, so now then, guys, let's quickly jump into the charts. Now, the first one I want to touch on here is Nikkei225. So the Japanese index, of course, after reaching its high here on the 4th of March, which was near the 21,875 level. I was talking about this one level in one of my previous videos where I was covering Nikkei basically, and from there we saw the index sliding back down and actually finding good support near this area here around the psychological 21,000 level. So basically from which it kind of reversed back to the upside and kind of continues to climb higher. Of course, looking at this little short-term picture from the from its reversal from the 21,000 level, you can see that yes, it is making higher lows here, but it's kind of failing to make some higher highs. So in a way, what's building up here nicely as well is, let me just quickly show you that what I'm seeing here, and you probably already are seeing it as well. And basically we are having something of a triangle, ascending triangle formation here, guys. So basically we're going to keep an eye on this one. Certainly, of course, this is just an idea for now. In a way we could see maybe a pop here to the upside, but again, until we see a break here out of this, we're not going to assume anything and just going to continue observing some of these key resistance and support levels. Now, of course, in terms of the upside, as you probably understand, we are going to be looking at this excuse me, this level right here at around 21,600 level. So a nice good push above that could lead towards the a possible retest of this high that we saw here back on the 4th of March at around 21,875 level. But of course, if we do see such a move, then to be honest, we're just going to take it to this level for now, and then we're just going to see how it's performing, because in a way we could see maybe something of a double top maybe forming, but that's of course just an idea for now. I mean, for now, from the very short-term perspective, if we do see a nice pop of the 21,600 level, then yep, the next level that we're going to be keeping a close eye on is going to be the 21,875 zone. In terms of the downside, even if we see a drop below this lower side of this triangle formation, still don't rush into it yet, because for us, for a better confirmation of the downside, we would like to see initially, of course, a move below the 200 EMA here shown as the black line, but of course, for better confirmation, we would like to see a drop below the 21,340 level, and then we will target lower areas. Of course, we will target the 21,200 and of course the psychological 21,000 again. So in a way, if we put some if we're going to put some arrows here, basically the scenarios here are like this. For the upside, it's the 21,875 level that we're keeping a close eye on, of course only after if we see a break above the 21,600. And in terms of the downside, we will get more comfortable with the downside if we see a drop below the 21,340 level, and then we will target the psychological 21,000. For now, of course, according to all the textbooks and everything, I mean, this formation is, of course, is more bullish than bearish, but again, we've seen several times where this formation kind of gets ignored, and then we see a drop lower here. So that's why that's why we're still going to stick to some of these key support and resistance levels. So keep your eyes on those. Jumping into excuse me, jumping into platinum now. One of my favorite precious metals or commodities, or basically looking at this. I was talking about this one in one of my videos last week, and basically I was telling you guys to keep an eye, of course, on the 831, where we're still kind of trading below it. So a nice push above the 831 kind of led this commodity towards a retest of the 841 zone. Of course, this is kind of currently holding it down, but again, if we see a further nice push here, a break through the 841 level, keep your eyes on the next potential target, which is going to be the, in a way, nice beautiful number of 850. So if we see a break above the 841, the 850 is going to be our next target, even though it is slightly above this high here that we saw back here on the 13th of March, but still it's a nice beautiful round number. So that's why we could see maybe just an overshoot here, a test of the 850, and then maybe a retracement, a small retracement back down. But for now, of course, we're more positive than negative, but again, for a better confirmation of the upside, we'll wait until we see a nice good push above the 841 level, and only then we'll target these higher areas. In terms of the downside, we're going to take a more conservative approach on this one and wait until this drops below the 821 zone. Only then we will target lower areas again, like the 809 area, or even the psychological 800 zone. So for now, it's probably better to kind of wait on this one and wait for the confirmation break. And like I said, in terms of the upside, it's the 841 that we're keeping a close eye on, and in terms of the downside, it's not even the 831, even though, yes, I mean, we could travel a little bit lower here, could move down and could retest this 200 EMA here shown as the black line, but for us, the kind of more of a near term, from the downside, from the near term perspective, could be considered if we see a drop below the 821 level. So for now, guys, keep your eyes on these two levels. Let's jump into a few pairs now, and euro dollar. Now, I was talking about this one yesterday, and look how nicely and interestingly it's moving. So basically we had a nice push here to the upside. We yesterday we managed to hit the 113.50 level, but kind of it pushed a little bit higher here, even actually managed to reach the 113.60, but quickly retraced back down, and kind of you can see that this is where the pair kind of still continues to hang around. It's kind of holding around its 200 EMA, but right now you can see that it's trying to make its way higher. It's pushing away from its pivot and currently testing the 113.50. Now let's see if the bulls are actually strong enough to kind of continue pushing this one further up. We are going to continue looking, of course, at the this 113.60 level, the yesterday's high, but if that is just seen as a little small obstacle for the bulls, then yep, we could see a further acceleration here to the upside, where eventually the pair could test this little tentative, in a way, downside resistance line taken from the high of the 10th of January, and we could see something like this happening, basically, where if, let's say, if the pair fails to get above this downside resistance line, then yep, we could see maybe the bears stepping in here again, taking advantage of the higher rate, and then pushing the pair back down again. So, but again, of course, this is for now, this is just pure speculation. Let's see how this is going to play out. First, from the very short-term perspective, of course, we're going to continue monitoring this 113.50 level. A nice good push above that, of course, could lead towards the yesterday's high near the 113.60. But if that fails to withhold the bull pressure, then yep, a further acceleration to the upside could be possible. Of course, the levels like the 113.75 could come into play, but for now, of course, then keep your eyes on this downside resistance line, this tentative downside resistance line, and we'll just take it from from there and see what the pair wants to do with it. In terms of the downside, let's say earlier, if this decides not to travel above the 113.50 today, and we see this reversal back down, for us to get more comfortable with lower areas, we would probably need to wait until we see a drop below the 113.25 level, and only then we will target areas like, for example, the 113 or the 112.90, which you can see that acted as a nice good area of support here, which marks near the lows of the 14th of March, and it also kind of acted as a very good area of support previously here as well. But again, I'll repeat myself, in terms of the downside, we would like to see a nice good drop below the 113.25 level first, and then we'll consider slightly lower areas. Jumping into EURJPY now, looking at this pair, it's very interesting. Of course, after a nice rally that it had here since the 8th of March, and you can see how steep that this climb was, but recently, or should I say last Friday, the pair managed to break this upside support line, the steep upside support line, and now it's kind of moving sideways within this little range here between the 126.15 on the downside and the 126.55 on the upside. So this little 40 pip range here, we're going to continue monitoring it, because like I said, for now it would be a bit difficult to say which way exactly it could travel to. We will wait for a possible break here through one of these levels first. I mean, if we see a break above the upper side here, if we see a break through the 126.55 level, of course this could increase the chances of seeing this pair traveling further up here towards the 126.95 level, which marks the highs of the 5th of March. But if this decides to retrace lower and decides to correct a bit more here to the downside, then a drop below the 126.15 level could lead the pair towards the next potential area of support near the 125.75, and you can see that this area also coincides with the 200 EMA here, shown as the black line. So good potential area for a test as well. But again, before we could consider that area, we would like to see a drop below the 126.15 level first, and then target this area, this next potential area of support. So for now, this is the game plan for the EURJPY. Let's see how this is going to play out, and keep your eyes on these key resistance and support levels. Jumping into the last pair for this for this session, and that's GBPUSD. Now, looking at this one, very interesting one, and at the same time could be a very tricky one. So basically, in terms of the well, let me start from this, that overall, of course, it still continues to trade above this upside support line taken from the low of the 2nd of January, but you can see that it's quite extended here away from this line, and in a way, for now, we're just going to continue monitoring this carefully, because on one hand, yes, it is quite far away from this upside support line, so we could see maybe a correction here lower. The only thing is, for us to consider that correction, we would like to see a drop below the 1.3220 zone first, and only then we will target lower areas. Of course, initially we will target the 200 EMA, as you can see how well that played out here on the 12th of March, and acted as a good area of support at one point, but again, the slightly below that probably would be the 131 zone, so slightly below the 200 EMA. But again, I'll repeat myself, that's in the scenario if we see a drop below the let me just highlight that quickly for you guys here. So if we see a drop below the 132.20 zone, so you can see here, very good strong area of support, also previously acted as a good area of resistance. So yep, this could open the path towards lower areas. But on the other hand, if you look at this little formation here that we've got here, in a way, some could say actually that this is something like a flag formation here, or even a pennant. So for now, of course, this idea is just somewhere sitting back in the back of our heads. But if this decides to push higher and starts breaking this this upper side of the pennant formation, then, well, I mean, this could increase the chances of seeing this this pair traveling further up here towards the highs that we saw here back on the 27th of February, and that was around the 133.50 level. And of course, for those who are more on the cautious side, you could in a way wait until we see a pop above that level, and then target higher areas, because this would confirm a forthcoming higher high here, and then, yep, we could target higher areas again. But for now guys, continue observing this little formation here. Certainly, like I said, on one hand, it is quite extended here to the upside, and it's quite far away from its this upside support line. But to be honest, on the other hand, it could also travel higher here. But again, we will wait for a confirmation break here. Of course, initially what we're going to look at here is, of course, this upper side of the pennant formation, well, the possible pennant formation, of course. But to be honest, for a level that we're going to be where we could get more comfortable with the upside from the very short-term perspective could be this 133 level. So a nice good push above the 133 zone could lead the pair towards the 133.50, and then we'll just take it from there and see if it wants to travel further up or not. But so basically, on the upside from the very short-term perspective, guys, keep your eyes on the 133 zone, and on the downside, keep your eyes on the 132.20. So a nice good drop below that level could lead the pair towards slightly lower areas, and one of the areas that we're gonna be considering, of course, is going to be the 131 zone. So keep your eyes on that. Okay, guys, I hope you found it useful. Thank you very much for watching and listening. I'll have to wrap it up here. And if you want to join me later on at my traders tea time, and that's 14:15 GMT time. But for now, I hope you have a wonderful trading day, and I'll see you later. Bye bye.